What's up, investors? It's the Russian dude. Let's once again talk about this more radical Fed pivot which happened a couple of days ago, because apparently there are some very troubling signs that we might potentially be heading into the recession. And this is exactly the main reasoning behind this idea why the Fed had to cut rates 0.5%, not 0.25% as previously thought. So long story short, yes, this was the very first rate cut since 2020, whenever these events with the health happened around the world, and well, obviously the Fed had to cut rates at that time, and since then there was not a single cut. So long story short, what we're experiencing right now is the Fed pivot. And if you remember from my previous videos, as soon as Fed pivot happens, the stock market in the kinda near future does go down, before most of the times going up. And long story short, right now the Fed pivot was not just mere 0.25%, it was double that amount, 0.5%, so maybe the consequences can be double severe. And the main idea behind this thesis is that there are some problems within the economy which Feds they do see. They're not willing to tell us what's happening right now, not to cause even more panic. So this is their attempt to kinda get the situation under the control. But this is the worst part about all of this. Whenever you reduce the interest rates, yes, you resurrect the economy, the economical activity starts to shoot up, but also the inflation starts to increase. And guys, obviously as of the moment of recording this video, the fight against inflation is not fully over. The target is at 2%, right now we are above the targeted inflation, so pretty much cutting the rates before the inflation reaches its target could be very dangerous. What we might see is also, besides economy resurrecting, and this is also not even a 100% probability that this will happen, we might also see that the inflation will start going up once again. And this is going to be the worst case scenario, because we will have increased inflation while the economy will still not be fully recovered from higher interest rates. Well, in the worst case scenario, once again, this could even lead to a recession or even stagflation. Even the Feds themselves, they also did not give that many good prognosis for the next year. Specifically, the GDP growth for this year was revised from 2.1% to 2% only. Then also the unemployment for 2024 is estimated to be at 4.4%, not 4% as previously thought, and that also by the end of this year we will most likely see at minimum of 2 rate cuts and a total of 4 cuts for 2025. So as you can see, the rates are supposed to be significantly lower by the end of next year, which also once again can skyrocket the inflation in case it is not done properly. Peter Schiff, for example, he also mentions that the Feds were kinda bullied by the stock market participants to cut the rates 0.5% because they wanted their assets to grow in value, simple as that. And also, long story short, Feds just simply wanted to satisfy the investors, say that, guys, everything is under control, we hear you, so well, here is your 0.5%, enjoy the growth. But according to Peter Schiff, this might not help US economy to avoid the recession, which according to him is already slowly but surely starting. And once again, he also confirms the very same statement I was making in this video, is that in the worst case scenario, and to be honest, probable case scenario, this will reaccelerate the inflation before it can reach its target. And then right here is also a very interesting graph I just randomly found, which shows the most recent 5 Fed pivots since 1995, and basically compares the very first rate cut of the beginning of the Fed pivot, which was either 0.25% or 0.5%. The ones rate cuts which are in red, these were the rate cuts of 0.25% as the first rate cut of the Fed pivot, and the ones which are represented by the blue line are the rate cuts of 0.5%. So as you can see, in pretty much every single Fed pivot which started with 0.5%, it was significantly underperforming if Feds started with a little bit more conservative rate cut of 0.25%, which once again was exactly supposed to happen. So basically, to sum it all up, what I'm trying to say here is that Feds maybe, yes, they were kinda a little bit too radical doing the 0.5% rate cut. After all, Jerome Powell himself, he said that the economy is under control, we got it covered, guys, don't worry. So why would he need to do such a radical cut? Maybe something is going wrong. And the worst thing, obviously, is the possibility of inflation reaccelerating, which this probability increases dramatically when Feds start cutting rates that fast. So, guys, Let's see. Please let me know down below in the comments if everything what I just said makes sense. As always, thank you so much for watching. Please like this video, subscribe to my channel if you enjoyed today's episode, and see you on Monday.